So next we are talking about growth and partnerships is something that's going to keep coming up time and time again today. My guests now are Sunil Sachdev, Head of Fintech and Growth at Fiserv, and Eric Cotton, Executive Vice President, General Manager at Central Payments. Good morning to both of you.
Good morning.
Good morning, Neil. It's great to be here.
Yeah, thank you so much for joining us. And as I say, partnerships are a huge recurring theme of our event today and their importance. So let's lay the groundwork of the partnership between the two of you. Let's lay that out for people before we get into the guts of it. What do you two feel you both bring to the table in this particular relationship?
Sure, I'll start. We're excited about the partnership we signed earlier this year with Central Payments. I think, Fiserv is an organization that moves data and money in a way that moves the world. And we have lots of great relationships in the U.S. with financial institutions as well as our merchant partners. We are at the top of the league table in many of the categories around issuer processing and acquire processing, as well as the largest digital bank provider in the country. So being able to bring that rich ecosystem of capability into a partnership with Central Payments allows us to extend those services to a brand new market. So that's what we're looking forward to with our partnership with Central Payments, being able to expand our ecosystem and bring some benefits in with the great capabilities that Central Payments has to offer around the program management area.
Yeah, and from the Central Payments perspective, I'll echo Sunil's thoughts. Having a partner like Fiserv, supporting our market-facing technology is huge. Central Payments brings payments experts to stand up market-facing programs, and there's so much more richness added when you've got a partner like Fiserv to support you with their technology and their expertise. So it is a truly exciting partnership that we are very happy to announce.
Okay, well let's start with the trends you're both seeing when it comes to banking as services providers. For you, what types of businesses are launching these sort of service arrangements, and how are they looking to do it these days?
Yeah, so I can start, Neil, with what we are seeing is that there's a lot of convergence happening in the marketplace, right? Historically, we've sold technology to financial institutions and we've sold technology to the merchant ecosystem. Now, what we're seeing with the API economy and embedded finance is that convergence. People are looking to embed financial services in any type of customer-facing experience, as Eric mentioned. And to do that requires different types of muscle memory, right? That it doesn't really exist exclusively within the financial institution arena or the merchant arena, right? You need to bring in some third parties like a Central Payments to help kind of bridge those services that are needed to deliver excellent digital journeys out to the last mile customer. So that trend of convergence between banking and commerce, we see as something that will continue to accelerate over this year and the next couple of years.
Yeah, I will echo that. The convergence, all of the different applications that you can apply a payments product is becoming, it's expelling every day. There's new payment opportunities. Payments are getting embedded with things that industries that maybe didn't even exist a few years ago. And, if you look at these new industries that are popping up with the lens of payments, there's a lot of them that fit together very, very well, which we're seeing in the industry from just the sheer amount of opportunity that's coming up on a really daily and weekly basis.
Because what I always like to look at is what good looks like. Who's getting it right? Who's doing a good job with this kind of in this kind of space? When people are being successful of launching banking as a service, have either of you got any good examples of people who are getting it right, or examples where it is working very, very well?
Yeah, I'd like to think Fiserv and Central Payments are getting it right, Neil, in terms of kind of how we're taking banking as a service into the marketplace. But, historically, we've worked with lots of brands that have embedded financial services into their offering. You could look at some very large merchants that we work with, whether it's Walmart or others, that have created financial services to help their last mile customers with cash flow needs, to help them with their shopping experience in their retail stores, or also helping them build credit and extend into other financial services as well. So I think we definitely are getting it right. I think there's an opportunity to broaden our capability, and that's where that partnership with Central Payments is so important.
Yeah, I will echo that. Because of the speed of change in fintech and in payments, the partnerships that go that extra mile, meet the market partner where they're at, and can allow their expertise to kind of permeate the product, is, I think, the days of plug and play. I think we're seeing some of those opportunities consolidate, and these partnerships where you've got expertise at all areas of interaction are gonna thrive on the go forward, just because of the complexity and the constant moving nature of where the space is going.
Well, as you say, Eric, it's moving so quickly. The ecosystem is changing, daily. Eric, I'll start with you. What for you have been the main learns? What are the main learning points that you're seeing when the market is moving so quickly?
Well, I think, the easy learn is banking partnerships. I think as more banks get involved, there's more financial technology companies, which drew more banks into the space. The right partnership with your financial institution is becoming paramount, as as doesn't take, you don't have to look under very many stones to see that. So that partnership between, the bank's core business, the bank's risk tolerance, as well as the product offering, that the fintech is bringing on is really paramount. And I think that's something that, you're going to find these strong partnerships with strong performing banks that are well diversified are going to be the ones that stand the test of time.
Sunil, your thoughts on that as well, about the main learning points?
Yeah, look, I think, over the last 6 to 12 months, we've seen compliance and managing a balance sheet become extremely important to financial institutions, right? We're now moving into an environment where money is no longer free, right? Interest rates are going up. That means deposit betas for financial institutions are going up. So I think a lot of the financial institutions are looking to figure out ways to have very thoughtful partnerships that can help their balance sheet, whether it's on the liabilities or the asset side of the ledger. And I think some of the key lessons learned is that, hey, everybody's got a finite number of resources that they can apply in this space. So working with partners that have deep expertise, working with companies that have good captive audiences that would appreciate embedded finance or digital financial services delivered in a very unique way. I think it's important, how do you pick the partner, how you think about the program, price the program, how is that program going to help you from a balance sheet perspective if you're a financial institution, and then, of course, the commercials associated. So, that entire value chain becomes ever more important in a rising interest rate environment where cost of funds are going up.
One thing I always like to do during these events is make sure we've got some really useful, tangible information for people to take away, because it's all very good to talk sort of very openly on the surface level, but it's nice to actually dig into some advice to take away. So let's look at talking about scaling profitably. How do you think fintechs or brands should be setting themselves up from the very beginning to scale well in the long run?
Yeah. Whoops. I'll go ahead and start, Sunil. Yeah, I think, how we approach it at Central Payments and how we've seen, various iterations of launch is, for us, the most important, in order to get to scale and to get to profitability, you have to launch. So I think having a super focused plan on getting in market. I think so often we see, maybe there's an unforeseen break in an implementation where, sometimes companies will take that as a chance to iterate or maybe pivot, which leads to a change in name and adding, piling on to the initial product launch. So, what we've seen is there's nothing wrong with an MVP that gets you to market, and you apply those learnings after launch to get to scale. Maybe you have a second phase where you're adding some more product features, but that picking a launch date, picking your viable product and hitting it sounds so simple, but so often deviating from that step, just creates this sort of negative momentum where you never get to market and you never catch on, and it makes scale very, very difficult.
Sunil, any thoughts on that?
Yeah, look, I think Eric hit most of the main points, and it's one of the reasons that we partnered with Central Payments. They've been successful helping nurture different types of programs in the marketplace to kind of grow in a very efficient way. And having a partner like Central Payments allows us to take kind of a lot of the inbound that we get across the organization and kind of filter that through to kind of ensure that we are picking the right companies that really have the ability to scale profitably. And that means they've got, a good notion of the services they want to offer. They've got great insight into kind of the financial metrics and what the benefits are. Because there's only so much that you can earn from a debit card transaction or a financial services transaction. So it's really important to appreciate, what is in the art of the possible in terms of scale, and what does that mean from an economics perspective once everybody takes their piece, right? And we've seen a lot of programs with a lot of great value propositions just kind of falter on the commercial side, just because even as they scale, the amount of money or the revenue is not sufficient to cover their expenses as they grow. So being able to have a very good understanding of what scale means, both commercially from a service perspective, I think are two of the key learnings we've taken away, and that's part of the partnership with CP.
One thing I did want to dig into is looking at brands or fintechs that are launching a card program. For you, what are the most important things for those kind of organisations to be thinking about when they're going for launch that they might overlook, they might not have fully appreciated before going to launch? Where have you seen those kind of arrangements stumble or be blocked?
Yeah, I'll start. I think one of the main learnings is the sheer number of attributes that it takes or decisions that need to be made to stand up a card program. I mean, you're looking at thousands of decisions across usually multiple partnerships. So I think, focusing on those partnerships is very, very key, and understanding where you as a fintech, maybe have some opportunity to learn and find a partner that complements those learning abilities is wildly important. I can't name how many times we've, you sort of go through that initial implementation, or you look at, the list of decisions that need to be made that, some you open up to the fintech, some you work with the bank, but, you have to check a ton of boxes and, fill in a lot of blanks to go from, product idea to program launch. So I think don't underestimate the amount of work and decisions and sort of forward thinking that it takes to get a card product to market.
Sunil?
Yeah, I would definitely echo what Eric said, but I'd add two things. One is the technology stack. I think a lot of folks kind of underestimate what's actually needed in the tech stack to launch a very profitable program that can add features as their engagement with their customers grow. I think everybody looks at kind of the first 6 to 12 months of launch and looking at a couple of features to get out there into the market. And as they scale, they recognize that the partners they may have picked, some of the BaaS platforms out there, can't really scale with them. And you get into a situation where if a fintech does really well or a brand does really well with their initial launch and they want to add a line of credit feature or a secure credit feature, or they want to add some other capability, whether it's bill payment or remote deposit capture, all of these services that now are kind of expected whenever you launch a banking product, and a lot of these platforms can't handle that. So that's kind of one learning. Make sure you do a lot of diligence on the platform. And then I think Eric alluded to this, but I'll double click on it a little bit, is the banking partner you have, right? We've had stories where fintechs have kind of launched, or brands have launched very successfully, and they brought in, let's say, a lot of deposits for a financial institution, but only to learn 2 months later that the financial institution does not want any more deposits, right? So they'll basically, change their compliance regulations, or they'll change kind of how they're going to approve certain transactions or certain or open new accounts. So that puts the fintech in a little bit of a bind. So we always tell our brands and our fintechs, think about more than one sponsor bank behind the scenes, because you never know what could happen when you have concentration risk with a single institution. So I think those are two areas: the tech stack and being able to have a diversified set of sponsor banks behind you, I think will help you from a long-term perspective.
Well, let's just stick with the idea about the sponsor bank and the role of the sponsor bank. Obviously, Central Payments, founded as the Central Bank of Kansas City, continues to serve as the partner bank for your banking as a service arrangements. What perspective you gained from the experience about the role of the partner bank in the situation we've got here?
Yeah, I mean, I think that role as being the payments division of a bank, when we were founded, has carried us exponentially. So we tend to look at things, while our technology is important to us, while our partnerships are important to us, the expertise and the knowledge you gain while you're part of a financial institution from a consumer and regulatory compliance perspective, BSA, AML, fraud monitoring, you can't, it's just so paramount and so foundational to who Central Payments is. I couldn't imagine us operating without that expertise and that knowledge and looking at new opportunities through that lens, which has helped exponentially with discussing partnerships with Fiserv. And when we think about our financial institution partners, when you're speaking the same language, it makes these conversations much more open, much more free flowing. So that Central Bank of Kansas City will always be very, very paramount to the core of Central Payments.
Sunil, your thoughts on that, about that role?
Yeah, look, it's probably the most critical role that has enabled the journey of embedded finance to where we are today, right? And it's probably a role that is under a magnifying glass as we speak right now because of the banking turmoil we've been experiencing the last couple of months. But, it's our perspective, I think, collective perspective with Eric and CP that, embedded finance will continue to grow and mature, and the role of those sponsor institutions will continue to grow. And we're doing everything we can to increase the size of the tent. We want more of our financial institutions to participate in becoming sponsor banks, because we really do believe it's a great alternative for them to bulletproof their balance sheet, whether it's, again, from the liability side or the asset side of the balance sheet. And we also feel that, the regulators are stepping up to help sponsor banks. Just last year, I think the FDIC and OCC created, just some marketing material and some pamphlets to help financial institutions think about their role, think about how they need to kind of build that muscle on the compliance side to manage some of these third-party relationships and have that expertise in-house. But given the convergence and the acceleration that we're seeing in the marketplace around banking and payments and the digitalization of payments, we feel that the sponsor bank role is only going to grow, and it's going to gain importance as we continue on this journey.
Okay, well, we are nearly out of time, but I'll get very quickly to some questions we've got coming in from the virtual audience. Thank you very much, as ever, for sending your questions in via the app. First one here, how do you think regulations in global markets will evolve as embedded financial services become more mainstream?
Yeah, I mean, I think we're already seeing some of that early on, that, the global regulatory agencies are, they're seeing what's going on, might be what's going on in Europe, and, the US market plays off of that and vice versa. So I think because the speed of transactions, the speed of payments is, now down to real time. There's real-time payments occurring globally, every second. It's going to take those, cross-border partnerships, global regulatory agencies discussing, how to make this both consumer friendly, but also not inhibit growth and innovation from a business perspective. So I think it is going to be evolving, maybe not at the speed of payments, but you're going to see that evolving for definitely into the next 3 to 5 year future as payments evolve.
Sunil, anything to add on that?
Yeah, all I would say is I think globally, where each market is in a different state of maturity when it comes to real-time payments and embedded finance. And I think first and foremost, the regulators look at their domestic markets to understand how they can kind of ensure that everybody has access to financial services. And I think being able to get to that bottom of the pyramid is paramount. And once you're able to create an ecosystem that is very inclusive, then it's about thinking across borders, right? And we're starting to see that in different regions around the world, whether it's in Asia Pac or Latin America or in Europe and in North America. Everybody's on a different, I would say, a different part of the journey, but I think all of those roads are going to converge. Ultimately, I'm a big believer in unified identity, universal commerce, and I think ultimately, the world will get there, but everybody's at a different stage of maturity right now.
And one last question from the audience here. We'll keep this one relatively brief if we could. KPMG, they predicted that the embedded finance industry would be worth some $230 billion by 2025, which really isn't that far off now. Do you agree with that? Do you see growth on that scale?
Go ahead, Sunil.
Oh, sure. I'll start on this one. Yes, I think we're big believers in the growth of embedded finance. And I think because we are in a very privileged position, as I mentioned, in many markets around the world, we have a very strong footprint, both on the financial institution side of the house, as well as on the merchant side of the house. So we see commerce from a very unique lens, and the convergence is happening. It's happening all around us. Our customers are asking about embedded finance use cases. Our customers are asking how they could make payments much more efficient and more cost effective, and we are working to that end.
Yeah, I agree. You're already seeing, big brands. You saw Apple's announcement with their savings account. These are just going to keep coming out from these large companies and trickle down, throughout the U.S. economy for sure. I think embedded payments is going to be, it's going to be huge, larger than it already is, and I don't disagree with that number one bit.
Eric, Sunil, thank you so much indeed for your time, and thank you for joining us here at Fintech Live New York. Thank you very much indeed.
Thanks you very much.